content of this podcast is produced for entertainment purposes only and is for informational and educational use. It does not constitute financial or investment advice. You should not make any financial decisions based on the information provided without consulting a qualified professional. All opinions expressed are solely those of the host and guest and do not reflect the views of any company or organization. The hosts and/or guests may currently own, have previously owned, or intend to own securities discussed in the content. The content produced here belongs to Daniel Andreev of 18 Degree Journal and cannot be reproduced or used without prior permission. We do not wish for this content to be used for AI training and do not give such permissions. WriteUp, Saramin Co, Ltd. Ticker 143240 on the KOSDAQ. A company trading below EV. Is the business really worth less than zero, or is it a value trap? Hey everyone, hope things have been well. I'm still enjoying my journey in South America and quite enjoying some of the beautiful nature here and breathtaking views. You can have a sneak peek right here below. Anyway, as I enjoy the views, I'm also finalizing the logbook to document production's readiness. In my audit, I've noticed a few irregularities that have sent me on a small research journey, and in the process, I may have uncovered something quite intriguing. A niche, profitable software business that, due to an asset sale, is currently trading at a negative enterprise value. You're essentially being paid to buy the business, but the question is whether this is a value trap or shareholders will never see the cash, whether the business eats or consumes the cash pile, or falls to depreciating currency, or maybe, just maybe, there's a hidden gem hiding in plain sight. Let's dive in and try to figure it out. I'll try to keep the piece flowing, so I might not include all the information, but if you want to find out more, please don't hesitate to reach out. The company. Okay, alright, I got your attention. A software business that's still making money and trading way below cash. We all know this year has been nothing but a bashing for software stocks, but could it really be possible one got to a point where it's trading below cash? What is this nonsense, and why does it sound too good to be true? Well, the company today is South Korea's leading or co-leading recruitment platform. I believe a recruitment platform is a bit too soft of a definition of the platform, at least from my Western understanding and use of LinkedIn, Indeed, Glassdoor, Workday, etc. We often hear in the West about the notorious super apps, and Saramin could well be considered a super app of sorts, specifically tailored to the niche of hiring and job applications. Think of it as the perfect platform with double-sided economics serving both the company and potential employees that offer comprehensive reviews, information on applicants, whether they would like the culture, the work, or have the experience to match, salary benchmarks, professional networking, individual profiles, and now, in the age of AI, built-in AI resume builders, coaches, personality tests, databases of past applications, and talent pools, as well as tracking of all these individuals as they move throughout the system. Maybe it's a little easier if we spend and look through each actor's lens. So, why could job seekers want to use the platform? They get an almost automated process of applying to jobs. They simply upload the resumes once, check it, improve it, and browse thousands of postings with very specific filtering. Before applying, they can read past employees' horror stories, see real employees, and learn about the culture fit, what is prioritized, and what they could realistically expect for pay. They can also have the process further automated with AI job matching, AI interview prep, and even document coaching, all on one platform. Well then, why do the employees want to use it? They get a systematic way to post their job openings on a platform with numerous users, and they have the ability to promote their positions, search through resume databases, see candidate profiles, see candidate self-introductions letters that are mandatory on the platform, use custom ATS resume filtering to match algorithms to identify promising candidates, and also buy premium recruitment tools, essentially simplifying the job of HR departments. The appreciation of this whole model is that everything is in one place. So far, so good. So how does Saramin make its money? Its main revenue drivers could be broken into three parts: a career platform in IT, outsourcing, and recruitment consulting, HR solutions. The Korea platform in IT is the business' largest segment, where the majority of revenue comes from 54.46% in 2025, down compared to other years as other segments strength, but also still the most important. It is also often 80 to 90% of all operating profits, as it boasts very large margins. This is the primary platform with the two-sided marketplace described above, where job seekers upload their resumes, search for jobs with AI recommendations, etc., etc. And employees post their ads, search resumes, buy visibility package, also etc. They also have a built-in employer to candidate direct proposal system available for a finder's fee. Sarah makes its money here through sponsored posts, promoted postings, granted access to resume databases and search fees for employers, large visibility packages, and incentive fees upon successful conversion from the talent pool direct proposal system. Saramin is the main platform, but in recent years, seeing the rise in specialized platforms in Korea, Saramin launched specialized platform-specific hiring niches, mostly to wave off the competitors and jump on the trend. Therefore, Jumpit, the developer-focused platform, Comate, platform for hiring foreigners and international talent with visa support, and Wonderful Senior, platforms for jobs, careers for mid to senior workers 50 plus years old, are also included. The margins in his business segments are insane, often high 90% when adding another listing, and is a huge beneficiary of operational leverage, as adding more sponsored posting does not hurt Saramin or cost much, unless of course oversaturation of the same sponsored posting, but it seems to be managed well within the sponsoring based on filters with employees' interests. The outsourcing, manpower dispatch, HR staffing segment is more of a traditional HR service segment. Throughout my research, I found many of such services across Asia, and reputation and brand name go a long way here, as do low rates. What happens is that corporations and industries such as manufacturing, logistics, administration, etc., have seasonality and need seasonal or temporary workers to push through higher demand seasons. Saramin would hire and dispatch workers to fulfill those contracts and in return get a fee. The business is a low margin business as competition cuts into possible margins. In 2025, this was about 29.62% of revenue. The recruitment, consulting, and HR solutions are the premium advisory services Saramin offers, with customized services for companies. So at times it is contract by contract. In 2025, this was 15.92% of revenue. Some of the services that Saramin offers competitors here are helping create end-to-end hiring strategies, headhunting, such as executive search, HR search, and insights, training, and consulting. A lot of these services are analytical and provide numerical benchmarks, like salary benchmark or talent market reports. It is a better business than outsourcing and is more useful in curing relationship and dependence on the platform. In the past, Saramin had high concentration of just career platform, with often 80 to 90% of all revenue from this platform. This part of the business is truly a cash cow, operating as an easily scalable enterprise. The problem that there is a main competitor, as we'll get more into the next section, and Saramin has been trying to create a full ecosystem that allows cross-selling to clients and introduction to the platform to allow a fostering relationship and upping their tiers for better marginal products. Essentially, a way to organically introduce more companies to the ease of the platform and slowly move them through other products, with the added benefit, of course, of creating some stable revenue on profit channels when normal hiring slows down. I think it's important to take a moment and understand what really drives a moat in the industry and actually brings in staying power. So, first of all, Saramin is at the moment exclusively focused on one domestic market, South Korea. This means it is extremely susceptible to the whims and winds blowing in the Korean employment market. This, of course, is one of the reasons Saramin has diversified its revenue streams. Not only has this expanded their business with, of course, some loss to favorable business economics, but it also allowed them to rope in business who might not have fully integrated into their platforms. But why would anyone want Saramin over competition? Or let's put it more bluntly, what is Saramin's moat? Saramin's whole existence relies on a network effects, meaning their whole value proposition, or that of a similar business, is to have the most users and the most job listings, both acting as a magnet for the other, meaning more job postings, more people on the platform, or vice versa. The secret is to attract this positive relationship of user posting magnet is data. Data on the employer's culture, salary information, etc. is what brings users to the to be active on the platform. For non-Korea audiences, think for a second. When you interview, did you not look at possible information on the company online? Try to research what you can find and know what to prepare no matter what platform. Well, others are not much different, and Saramin makes sure the information you are looking for is the same place as the job postings. The other thing that attracts users and are necessary is the toolset. The help retention can be commoditized if all platforms have it. Matching success, which is helped by more users and more data. Again, bigger you get, the harder it is to compete against you. And then, of course, for employers, not only do they need the most possible candidates and databases, but they also need specialized filtering tools that truthfully can also be commoditized but are important to have. So Saramin's business proposition and life depends on retaining users to do that they try to grow their data. Their data is the point of failure and the point of success. And I have a gorgeous diagram of this that I'll try to link in. History, very quickly. Now, before I get fully ahead of myself, a very quick recap of the company's history. Founded in Seoul in 2005 as Saramin HR as a simple online job portal. Soon after, in 2006-2008, acquired or integrated into the Dow Technology Group, part of the Dow Kiwoom conglomerate. In 2012, Saramin HR went public on the KOSDAQ, ticker 143240, and is still traded there today. In the 2010s, it became the co-leading and dominant player of two, competing with JobKorea, dominating the job platform market, and at times edging out competitors as leading competitor. In 21, Saramin took a stake in Remember, a business card linking app hybrid for Korea, and the very same stake that they sold in 25 to amass a large cash pile, approximately 160 billion Korean won. In April 2023, they rebranded simply as Saramin Co Limited. With the rise of niche hiring boards and apps in 23 and 24, Saramin aggressively launched specialized vertical applications to cater to specific hiring niches. And in the last couple of years, Saramin has also been aggressively launching and integrating AI-based tools into the platform, going headfirst into the belief that this is the new version of how hiring will be assisted. Today, they boast roughly 17 million monthly active visits and are a leading HR tech company in South Korea. Saramin, of course, is not the only success story in the space. It has a duopoly, private equity-backed competitor, JobKorea. JobKorea is actually a Saramin veteran in the industry. It is 9 years its senior, originally founded in 1996. It spent the first couple of years under various ownership, originally held by Monster Worldwide, before Korea private equity firms came calling. Between 2013 and 2015, it bought Monster's stake for about 205 Korean won, before a fierce battle in 2021, in which Affinity won out, and in March 2021 bought the full stake for 900 billion Korean won. The two platforms have been at each other's throats, trying to win market share, crushing or buying up startups entering the market. The two platforms are eerily similar, but based on a synthesis of what I read, it seems to both dominate specific industries. Saramin's real strength is in its manufacturing, logistics, production, and service sectors, and SME office hiring, skewing towards younger 20-29-year-olds and more entry-level hiring candidates, and doing comparatively well outside of Seoul. JobKorea's core strength runs the other way: office workers, experienced hires, and IT development and market roles, with a higher average level of education and experience among its applicants. Saramin has also expanded into verticals to specifically target niches hiring and counter JobKorea with specialized platforms in that industry. IT was one of these main focuses. The platform is called JumpIt, launched in 2021, and was awarded the #1 development recruitment platform award in a 2024 Korean Consumer Satisfaction Survey. Various sources I've come across hinted at Saramin having a particularly strong public sector presence, but throughout my own research, I couldn't confirm these claims. Both platforms run their own mock exam prep tools for the standardized public enterprise entrance test. JobKorea's own version even claim banks over 30,000 practice questions. So this looks like table stakes for both platforms. The authoritative sources for public sources hiring have also continuously mentioned Job.io, the government's own job portal, which, again, I believe is probably the more dominant in this niche. I did find claims that seem to be true that Saramin has better tools for foreign hires, but it seems JobKorea is also entering that market. One distinction, the JobKorea seems to have definite lead in the part-temp worker market. They have a super app called Albamon that has 60% market share and seems to be the go-to default for those roles. This especially helps during times like now when regular hiring activity stalls. The platform boasts 38.77 million cumulative active visits in 2025 and 10.3 in Q1 of 2026 alone, well ahead of its next competitor, Al Mbachungok, I completely butchered that, which logged only 30.58 million cumulative active visits in 2025. As for consumer data, there seems to be a 2022 open survey report that is built basically off 1,000 respondents nationwide, aged 20 to 49, that keeps on being cited, mentioning that at the time the two platforms were neck and neck. JobKorea slightly ahead on brand awareness, 81.5% versus Saramin 77.5%, essentially tied on lifetime usage experiences, 62.5 versus 62.4. But Saramin actually led on recent usage. We used within the last 6 months at 38.8 versus Korea's 35. The mindshare edge seems showed up in the actual usage numbers too, at least for a while. As recent in the first half of 2024, Saramin was the more active platform by cumulative monthly active users, 9.22 million users compared to JobKorea's 7.62. However, over the last 12 months or so, the pattern has completely reversed. By early 2025, JobKorea has already moved ahead, 6.89 million cumulative users from January through April versus Saramin's 6.44 million. Here's what the summary table me and the chatbots basically compiled from online recent activity statements. So it seems that JobKorea over the full year of 2025 had about 20.56 million, Saramin had 18.89. Remember, the platform is sold 9.69. The other two platforms, which we could kind of ignore, had 1.57 and 0.98. Now for Q1, again, we see a divergence that 5.54 million for JobKorea and 4.87 for Saramin. So still pretty close, but JobKorea is leading in usage. To gain further insights, I looked at the search results. Now, this data is linked to online search activity. Since there's no clean way to actually look up in the app, I'm using Google and Never as proxies. Since between them, they held two dominant search engine market shares in Korea. Google Trends data for South Korea, July 2025 to June 2026, shows JobKorea consistently outpacing Saramin in search interest, with a sharp spike around March 2026. This data could again be slightly tainted because JobKorea in English searches could be just foreigners looking for work. When looking at Never Data Lab, tracking the same window using Korean search terms for Saramin and JobKorea, shows the opposite. Saramin is consistently ahead of the entire time. Google's share of South Korea's market has fallen from roughly 80% in 21 to 46. Today, while Never has climbed to 15 to 44% over the same period. Two are essentially at parity. And when I visited South Korea last year, most people were using Never. I think it helps a lot since Never Maps has more information and is licensed to operate in Korea. Anyway, I don't think you can draw many conclusions from this data, and it just helps set the tone to get a vague direction of the situation on the ground, granted through a very thick fog, as none of the data is conclusive. I compiled the data with Claude and structured it a bit to be a little bit more visually appealing, so hopefully it helps, and I'll attach it again in my report. So, what has really been transforming and changing in the two platforms recently? Well, just like most of us feeling the influence of the AIization of services, Saramin dove headfirst into heavily investing in building out all the different AI tools. The advantage of having them first has because of the director's rules. For those curious, they have a very strict rule of only having director serve up to 2-year terms with 1-year renewals. So it's very strict, and the purposes of this, due to their explanation, is to not fall back technologically. So that's what they did. JobKorea are now operating under a new parent, WorkSphere. Of course, copied the strategy and now explicitly credits its recent user growth to AI-powered recommendation and matching upgrades, new AI agent features, and expanded community services. JobKorea also directionally focused on areas where its platform was weaker and recently acquired JobPlanet, the company review and culture data platform, specifically to feed more signal into the matching engine and distort Saramin's dominance. Saramin is still running the same race with its own AI resume coaching, mock interview tools, matching algorithms and recommendation engine, avatar search, which the company has explicitly modeled to Netflix's approach to personalization. This is where a lot of the R&D spend has gone. And from the looks of it, the spend to integrate those systems in the platform has been enormous, but I do not leave with the impression that this is going to remain a huge cash eater for the ongoing development. Yes, they will need to maintain and improve it, but the main tools that need to be built out first cost more upfront. JobKorea's strategic pivot and aggression acquiring these to close the gap with Saramin, as well as the recent outgrowth over Saramin, did force me to think about one point. What if Saramin ends up not in a duopoly, but is the second player in the business? Silicon Valley taught us that in a software business, the profits and benefits of huge network effects and scale really occur to the primary player. Here too, the benefits of business cogs really rely on the large number of active users attracting business to post on the platform, which then brings in users, which then brings in more business, and so forth. The fear here itself is the divergence in growth continues to hold, as it started 12 months ago. Saramin will be at risk of JobKorea breaching past this inflection point or critical mass point where the scale of the business would act as a magnet to attract the remaining business into itself and users along with that. The flywheel that was illustrated in the previous section, the two gears turning in the company section, to be more exact, is the lifeblood of both businesses. The gears themselves can only be effective if a company usage doesn't drop below a certain size. Size allows for better spend, and things that bring more users and gap in the user experiences allows to switch over between the platform. The effects could be this sort of cycle: better UX experiences, accessibility to get people into the door, leading to more specialized and purpose-built tools for different hiring niches. Then in turn drives more data, accumulation, and quality, which then actually acts as a foundation to everything else. Better data enables stronger matching, and stronger matching is what builds real employee and employer commitments to the platform. Once you have a commitment and scale, the flywheel accelerates each additional user post, making the platform meaningfully better for everybody in it, not just marginally better. I know I repeated myself here, but it is very important to understand. If you reach a much larger size than the competitor, it becomes almost impossible to compete against them. So what are the current trends? Over the last year have been very tough for Saramin. Not only has there been a period where JobKorea has outgrown them, but Saramin has been operating in a less active Korean economy overall. Revenue has dipped and margins have compressed. But the reason for that, of course, is that the highest margin part of the business, career platform, is the one compressing the most in a slower hiring environment, while the lower margin outsourcing business becomes a bigger share of the overall revenue almost by default. That mix alone is enough to drag margins down even before you get any competitive pressures from JobKorea. You can clearly see this looking at the career platform segment, and I have a chart of it. That said, I don't think this is really cause for panic. If you look at the actual hiring activity in Korea over the same period, it mirrors what we are seeing show up in Saramin's own financials almost one for one. This isn't Saramin's specific underperformance, but the broader environment. I'll flag here to make sure this doesn't deteriorate further than faster than the wider economy does, but it's not a state I'll be picking one over the other on its own. So what is my idea? Okay, so the whole idea and the summarization of all the other sections, okay, so you skimmed it or got to this part. My current stance is that Saramin is South Korea's second largest job board platform. I do not believe that data yet demonstrates that JobKorea is close to breaching the tipping point of becoming the undisputed primary player, which would make Saramin's enterprise value effectively zero. So, with that in mind, let's look at what the current price offering and what we're actually buying. Adding a small anchor or important context here, hopefully without too much anchoring bias, insiders were willing to pay up for shares. So Kim Il-ki, former Dow Kim Group chairman, launched a tender offer up to 900,000 shares, or 7.68% of the company, at 18,000 per share in March 2026. 25% premium of the prior close. The offer ran through mid-April, and only 672,000 shares were tendered, or approximately 70% of target. So today, Saramin's market cap is around 170 billion Korean won. The shares traded approximately the 50 and 60,000 won range, with approximately the day of writing at least is about 110 million USD. What do you get for that price? Well, I alluded to this earlier. Saramin sold its stake in November in 2025, and because of that, the current have 213.4 billion sitting in cash and deposits, against total liabilities of about, we'll call it 60 billion. So north of that, 154 billion in net cash on a company with about, we'll call it 10.5, 10.7 x dividend, x treasury shares. Most of the cash seems to be sitting in a bank deposits, and to my estimate, it seems to be earning around 3%, estimating taking it from short-term bank deposits having a 3% range, policy rate at 2.5 in South Korea. This alone, depending on whether you are net in liabilities or in some, yields roughly 14,300 or 19,901 per share. The amazing part is that this is not the only substantial assets they own. Saramin holds a real estate trust valued at about 42.1 billion on the asset sheet at IFRS equity method valuation, so that's updated regularly. They also converted office space into investment property, which is carrying a value of 8.2 billion, but a deposit fair value of 12.57 billion. On this property, they also have net rental income of 281.6 million. Of which had a composition of that as 689 million in rental income minus the 207.9 in operating expenses, for a yield of 2.24 to 3.43%. So this adds roughly 4,700 to 5,100 per share for the real estate trust plus their investment property together, depending on whether you use the book value to disclose fair value. Now, I know what you're thinking. We have already breached the market price per share, so the business is being given away for negative value. Is management doing anything to return money to shareholders, or is it just trapped in the company? As a matter of fact, they are. Saramin has a dividend policy, and there seems to be a recent increase in payouts. They don't have a stated payout ratio, but it's been raised compared to previous years. So the current dividend is 701. Last year was 500, so you have a little bit of growth. Total dividend is 7.35 billion Korean won. Management has also authorized a buyback, and the year they plan to cancel out about 8.34% of the company, with another 2% allocated to employer compensation. So with all that in mind, without even touching the actual operating business, what does this leave us valuation-wise? The shares themselves should be worth anywhere in the range of 19,000 to 25,000 per share, based solely on cash, deposits, and real estate trusts. And the investment property, again, this is before we've assigned a single one to the actual recruitment platform itself. So, since we already breached on the value of the shares looking only at the cash and non-operating assets, let's take a moment to look at the possible frameworks for valuing Saramin's business itself. Keeping in mind that this is mostly a software business, meaning high margins as long as there's scale, and because we've already captured the rest of the value in the share price, we can do this back-of-the-napkin estimate of what Saramin business could be worth, assuming a realistic middle bear case, with Saramin dying in 5 years and JobKorea running away past the critical point. Also, for context, JobKorea itself was bought for about 900 billion in 2021, when doing over 100 billion revenue and 50 billion in EBITDA. IB commentary seems to imply that it was sold for about 10x EV divided by EBITDA, and the part-time job vertical Albon is valued at 20x. I'll also remind you that Remember was sold for 550 billion plus billion, though there are not direct competitors, just laying the foundation of what we could consider. Saramin currently earns about 13.3 billion in the Korea platform operating platform, so just that platform, and yes, it's slowly declining. Rather than lay out a base case and bull case here, I'm just going to call this bear middle case, treat everything better as a pure upside or free lottery tickets. I'm assuming the business keeps declining roughly along the trend of the last 2 years, and it's no longer really going concern within 5 years due to JobKorea stealing more market share and killing the customer's flywheel. I'm also going to assume Saramin's user base and resume database aren't valued at zero. I believe that if Saramin does die, JobKorea flush with PE money and clearly in acquisition mode already, that bought 9 Hire in 24, JobPlan in 25, and rebound the whole thing to WorkSphere, would rather buy up the scraps than let a new well-funded competitor scoop them up cheap and solidify their grasp in the Korean market. Recent niche HR platform deals in Korea have gone anywhere from 20 to 50 billion. Saramin itself paid about 9.66 billion for a Lala job, part-time back in 2023. Given Saramin's much bigger scale and data depth, I'll assume 50 billion won here. And I'm not going to discount it back today because I think I've already given it a rough margin of safety just by valuing it at 50 billion for the data part of the business. And I'll also assume that the R&D spend stays roughly where it has been in the last couple of years, roughly at the 9.710 billion annually, which has been flat in absolute terms, but as the revenue shrank underneath it, meaning it actually been eating a growing share of revenue, 10.2% separate entity revenue 23, 11.8% in 2025. So running the decline forward in rough time, 20% a year pace, and the last 2 years discounting each year back roughly at 10%, we get a cumulative value of present value discounted 10% of 28.22 million. That's about 2,630 per share from the 5 years of declining profit alone. Add that to the 50 billion terminal value sale of JobKorea, the platform, left undiscounted, since I'm not inflating the number for the growth either. That's another 4,660 per share. Combined, the business itself is worth something like 7,300 per share in the bare middle case, and add to that the 19,000, 25,000 per share sitting in cash deposit real estate trust and the investment property, and you get anywhere from 26,300 to 32,300 per share, even in a scenario where the business actually dies on schedule. Against today's 15,600,000 per share price, that's a 64 to 102% upsides of what I'm calling the realistic downside case, with a free lottery ticket on the business and economy recovering. Risks. So far, almost everything I've said, in one way or another, sounds a little too good to be true. Where's the catch? Well, predictably, there are a few. We can't talk about cheap Korean stocks without addressing the elephant in the room. South Korea is known for having cheaper valuation and a discount due to the complex chaebol family structure that runs much of the economy. Essentially, due to the complicated corporate governance, family conglomerates operate through a complex web of ownership, with many companies run for the benefit of the family rather than minority shareholders. So investments demand a discount to accept that risk. The conglomerates are incentivized for these actions due to South Korea's insanely high inheritance taxes, 50 to 60%, since the lower share price at the time of a succession means a smaller tax bill for the inheritance stake. Conglomerates tend to suppress prices until this hurdle is overcome. Saramin has some of that hair and can't escape the discount. Today it's controlled by the Dow Kwon Group. Dow Technology is the largest shareholder at 32.59 pre-tender offer, and Dow Data, Q1 Securities, and E-Money and Kim Il-ray personally hold stakes as well. There is investor concerns about whether Saramin, as part of the group, will be used to help other companies in the Dow sphere, and investor will not reap the rewards of the cash file. Kim Il-ray, former chairman of the whole Dua Kyo Group, also seems to have recently got into a kerfuffle in the 2023 Dow Data SG stock plunger controversy. The prosecutor reportedly didn't end up indicting him. These ties well with concerns about capital misallocation. Recently, there has been many flags that Saramin spent 2025 selling non-core assets. The main one did go to a third-party buyer, but the Vietnamese subsidiary Applancer didn't leave the family at all. It went to Dow Quum Innovation Company Limited. Same group, different pocket. It's not demanding on its own, but it tells you that instincts to keep things in-house exists and has already been acted on once. The whole thesis here depends on that 160 billion cash pile actually finding its way to shareholders, whether through buyback, dividends, or genuinely accretion acquisition, rather than quietly finding where the wider Dow group needs it next. I'll also note that the acquisition Lala Job operator, it's kind of a Tinder for job matching, has recently had a 93% write-down, and I know Saramin is expanding vertically, but they have also had bad acquisitions. Anyway, personally, I'm confused about the risk associated with being part of the group. They seem to have a good track record with shareholders. Recently, as we discussed, the strategy was to implement buybacks and raise dividends. They also have delivered recent returns for shareholders in other projects, so I'm not convinced that they are out to screw us over. Hopefully, I'm not being blindfolded here. The other unavoidable risk is that JobKorea, seems Saramin was the leader of the two horse race, recently has been losing ground to the noisy neighbor. I won't dive deep again into the whole cliff risk, but I think it's important to repeat the whole moat is built around being a major player, and JobKorea eclipsing growth is an existential risk as Saramin loses scale. There's also the risk of that 50 billion added to the data valuation could prove worthless in the end, but I do feel that all of this is included in the huge margin of safety. Let's not forget Saramin is still limited to the domestic market, which itself is susceptible to many shocks. Structurally, their demographic put the nation on a disadvantage, and let's not pretend this will shrink Saramin's business over time. Korea has one of the lowest birth rates in the world and shrinking work age population. And other structural difficulties like oil shocks, the 2026 Iran war, show how vulnerable the economy is to slowdowns due to external shocks. Since the war began in February 2026, Iran effectively closed the Strait of Hormuz, through which Korea routes about 70% of its crude oil. Korea has taken a real hit. The won fell its weakest level since 2009, and the OECD cut Korea's growth forecast sharply almost any other major economy, specifically because of how energy dependent Korea is. The government had to roll out fuel price caps roughly 26 trillion won relief package. To me, again, the whole Saramin business is added bonus, so you have a huge margin of safety on that cash. The cash, however, is not bulletproof. Not only do you need to worry about hands managing it, but also the stability of its worth. I just mentioned the cash and the entire cash pile, the real estate trust, the dividends, all of it sits in Korean won. If you're reading this from outside of Korea, like me, you're susceptible to the currency moving, not only your opportunity cost, but the actual worth of the business in domestic currency. One strength against your home currency is a tailwind to get you for free. One weakness eats into your churn. Even if every single thing in the thesis plays out exactly, any given thing, as everything in both, the one hasn't exactly having a good year. Before leaving the risk, I probably forgot to mention, let's not forget that 110 million USD microcap trading in the KOSDAQ, that is not super liquid. After the tender offer, related party insiders ownership is sitting roughly, call it north of 55%. Doesn't have a huge free float to actually trade, but cuts two ways. Can make it harder to build an exit position or the price you want, but also means there's simply fewer outside shareholders available to do the market correcting discount job. Add it all up, and not only changes my overall view, but let's not pretend this is absolutely free and riskless opportunity. So in conclusion, finally made the conclusion, hoping that I didn't ramble on too much. That was what I was saying, makes sense. Personally, I think Saramin is a very interesting company. I would also have enjoyed using such a service in my own country, and who knows, one day I might. I don't think this whole thing, investment thesis, is a HR IT business with some data moat sitting on a ton of pile of cash that acts as a margin of safety. For me personally, the whole thesis rests on the notion that JobKorea doesn't reach the critical point where the business continues to spin faster and faster, and that Saramin has an abrupt end. If makes it whole network work collapse. So this is the main flag I'm keeping an eye on, along with any of the corporate governance risk. Hopefully you enjoyed this piece and didn't mind me repeating myself and jumping around. A few more drafts I'm working through and hoping you have them out soon too, but also trying to enjoy my vacation. Wishing all the readers the best. If you have any questions, please shoot me a message. Cheers. It's Daniel from 18 Degree Journal.